Looks like a little tactical trade across the healthcare space I want to put out really for more nimble, I guess, investors across our network, I would say. Since reporting the first half result, the sector as a whole has actually held up quite well. It's up 6% over the broader market by 3.5 points. But really looking across the different names that make up the large cap space, it really was driven by CSL outperformance, roughly 10%. Offset by Ramsey actually going a lot weaker, about 10% downside for Ramsey. Historically, I looked at the correlation between these two names on a 5-year view. It's normally pretty tight. That unfortunately has broken down in the last couple of months. So we have Ramsey trading 14% below CSL. Historically, it trades at 8% above the name. So we're really looking at it. Will this mismatch close? And does it represent a trading opportunity? And we think so, and we're going to tell you why. Looking at CSL, I still continue, and this is an ad-rated name, still continue to view this as a core holding across the network. Really remain confident in the future growth trajectory, really underpinned by what we've seen as the competitor capacity issues, those coming offline and kind of benefiting CSL. Really strong uptake of its new products and a vaccine business that looks to turn the corner and break into profitability back into fiscal 18. But it looks really adequately reflected in the current share price. This stock is up 36% since its December low. Compare that against the ASX 200, which is up a mere 2%, so really outperformed quite substantially. That has expanded the multiple. It currently stands at over 1 standard deviation rich on both an absolute and relative basis. So I really continue to recommend here, both Scott and I, to trim any overweight positions, even across the healthcare space in general, because it's kind of out of sentiment. Right now, our sentiment is weak. Our resident technical expert, Violetta, actually concurs because she flagged a limited upside in both on RSI and MACD indicators. So now turning to ad-rated Ramsey, really shares here have been considerably weaker since their first half result. As I said, down roughly 10% since their reporting. Not on a poor result, mind you. The result actually was quite good. Fiscal 17 earnings were actually upgraded 2 points, targeting NPAT growth of 12 to 14%. We're sitting roughly at 13% in line with consensus. The domestic business is really firing on all cylinders, doing quite well, 7.4% in the half. The second half, this half obviously was targeting 5%. That's roughly the long-term average. It was good to see. The EU business, about 45% of the profit for this company. Yes, it's experiencing headwinds in pricing, but it's still holding its own. So really what it was, and I shouldn't have to repeat this because unless you don't know, you're living under a rock. The CEO is retiring, so that was flagged. But chatting with management, this is what I really want to highlight the other day at length over an hour conversation, going through the ins and outs of what the heck's going on. What's the scuttlebutt out there? They're more or less saying there's a lot of misconceptions, quote unquote, and misunderstanding, quote unquote, in the market today. So I did put out a piece you'll see in your inbox in the last couple of days, kind of highlighting 8 key concerns and answers. Hopefully you can see fundamentals haven't really changed. I'm not going to go through those. I want to save you guys the time to go through those, but it's definitely worth your while. It's worth the read. But just kind of ranging from the CFO, CEO selling stock. I really believe it's not a stampede for the exits. The Ramsey Foundation, that's a foundation that holds about 30% of this company's of stock, selling $500 million worth. I think that's fake news. The Senate review on prosthetics, that seems neither here nor there. It's actually immaterial to me. So I think all this should give you some comfort that the fundamentals haven't changing for the stock and everything seems to be intact. So here we're looking that the stocks are trading roughly at 22 times FY18 on PE level, obviously. It's now in line with the broader healthcare names, and it's actually only 3% above its 5-year average. So I think when I look at the quality, high quality of this base business, the fundamentals, as I said, kind of unchanging, definitely mispriced in my book. So I would be looking to, if you don't believe me, I actually looked on my phone this morning, and it looks like another broker upgraded Ramsey from a neutral to an outperform. And turning back to our resident technical expert, Violetta, I would say it looks oversold on an RSI as well. And just a quick reminder, as I said before, don't sound like a broken record here, when CSL's longstanding CEO, Brian McNamee, left now 5 years ago, that stock did sell off. Mind you, not as much as Ramsey. It sold about 10%. But since that time, that stock is up over 180%. It's trading at an all-time high. Is it really crazy to think that Ramsey couldn't follow suit?